at least to the start of 2023. So lots to talk about. But first up, let's talk about the new listing today, the last one of the year. Elin Electronics made a tepid debut on the bourses. The shares listed at 244 a piece on the NSE, which is a small discount to the issue price. Sanjeev Sethia, Director, and Akash Sethia, Head of Strategy at Elin Electronics, join us on the show now. Gentlemen, good morning. Thank you very much for joining us. This is Pavitra, and Sanjeev, let me come across to you first. Take us through, as you remember the last time that we were speaking, you said that you do plan to grow your revenues, almost double them in the next 2 to 3 years from the current around 1,100 crores that you do have. Your current market share is also around 12%. Can you tell us what is the plan and how you would really expand this in the next 2-3 years?
Yeah, sure. First of all, thank you so much for having us. Our plans going forward includes, expanding our existing product verticals, adding subcategories to that. So probably our fastest growing revenue-wise division would be the new fans division, where we intend to launch a lot of new models, venture out from ceiling fans to table pedestal, axial, fresh air fans, and BLDC fans. So, including the increase the product basket and offer to and add a lot of new customers. In our small appliance division, we intend to increase our sale of mixer grinders, irons, and we want to tap the e-retail business in this category because that's again another fast-growing category. Personal trimmers is another division where we want to expand, and we have very healthy orders. Our third vertical, which will fuel our growth, is the motors division, where we intend to get into new categories and expand our product range and add new customers. So our primary growth is going to be fueled by these three categories. And we are also looking to expand into new categories of small appliances, and motors, especially looking at the EV range. So these are some of the businesses which are going to fuel the growth for the next 2 or 3 years.
I think before
I also want to point out that there's a strong China plus.
Sure. No, I just had a follow-up over there, Sanjeev. Also, you had spoken about how you expect to clock in about 2,000 crores of revenues in the next 2 to 3 years. Now that your company is listed, can you tell us a little bit about the targets? Do you hold on to that? And also, this debt-free status, will you be using all of the IPO money to reduce debt?
Yeah, so we hold on to the targets which we set for us, and we believe we will get there. And of course, as far as the IPO money is concerned, we will become debt-free. So definitely we'll become a debt-free company.
Morning, gentlemen. I just want to take our viewers that how over the past 5 decades that Elin Electronics has been in business, the company has constantly been foraying into newer spaces. So in 1973, it was a tape deck mechanism which you used to manufacture for audio cassette players. Let's get that table up for you. In 1977, the company started manufacturing motors as a backward integration. 1999 is when the company started manufacturing small appliances. 2 years later, they got into LED lighting. 6 years later, in 2007, it was manufacturing of flashlights. In 2019, it was manufacturing of fans, as well as medical diagnostic cartridges. Could you give us an indication of, you spoke about some of the new areas that you want to get into in the small appliances space. You want to tap into e-retail. I also heard the word EV thrown in, Mr. Sanjeev, when you were talking about your plans. Could you elaborate a little bit more on how you plan to scale these up? And what would be the projections that you have?
Sure. So I'll first address the EV. Basically we are into the motors is a major business vertical for us. So we are looking at BLDC motors, especially for the 2-wheelers and 3-wheeler category. That's a fast-growing category. Right now, a lot of motors are being imported. And since we are already in BLDC in ceiling fans and mixer grinders, that's a natural extension for us because the technology is already with us. So that's the EV space which we want to come out in. Now, as far as scaling up the business is concerned, the ceiling fan or the fan business has probably just been doubling for us year on year. And here, like I just mentioned, that we are adding new categories. So TPW would be a new category where we already have an order book. And we are looking at maybe revenues of around 70 to 80 crores in the coming fiscal for this category alone. We've got into BLDC fans, which is again another fast-growing sector. Currently, it accounts for almost 5% of the ceiling fan market, and in the coming year, it's expected to double to about 10%. So that's going to be another area which is going to drive our growth. As you know, we have a very healthy background in electronics, also very strong EMS setup. So compared to, let's say, a lot of traditional fan manufacturers, so that gives us a very healthy advantage, the BLDC fan, because of our electronics background. Going forward in small appliances, trimmers, we already have a very healthy order, and we are looking to grow that business, with add another 100 crores in our revenue in the coming year or year and a half. Motors, we have launched another category that's for the air conditioning units. It's an outdoor unit motor, and then we are also getting into the IDU, indoor unit motor. So that's also going to lead to a pretty healthy growth for us. So overall, we look to grow at least 20 to 25% in the existing categories. And then I mentioned some new categories which we are looking at. They are allied to our existing businesses. They could include products like, chimneys, ovens, OFR heaters, convectors, kettles. So basically in the small appliance scale. So these are the categories which we look to grow into the future and will fuel our growth.
All right, got that. Let me also bring Akash into the conversation. Akash, hi, thanks for joining us. You were just going through all of these different, your diverse portfolio where you have fans, you have LED lighting, you have all of these hair tools, mixers, grinders, all of that. Could you run us through the kind of margins that you have on some of the larger categories?
Look, I'll just first go, for the margin for the company as a whole. So for the company as a whole, our EBITDA margins have always been in the range of, 7.5, 8 odd percent. Within the overall business, motors and fans have a comparatively higher margin profile as compared to, say, LED lighting or a small appliance portfolio. Also, what is worth pointing out is that when we have a strong focus of growing our ODM business, and within the ODM business, margins in general are anywhere between 100 to 150 basis points higher. And another noteworthy point, is that we've recently entered, the medical diagnostic cartridge segment. Where our EBITDA margin profile is fantastic. It's almost double of, some of our other product verticals. So we have a strong focus to grow that. So all said, hopefully over the next, 2 to 3 years, we not only expect to maintain, but hope to move up in terms of our EBITDA margin profile.
So you said the ODM business, right? The original design manufacture business, where you're expecting to see margins go up by 100 to 150 basis points. So Akash, tell us, in this ODM space itself, I understand that it's gaining quite a bit of traction in India. Brands are collaborating with ODMs on product development. What kind of opportunity do you see over the next 2 to 3 years? What could the quantum be?
Look, I think there are SEBI restrictions on giving out exact numbers, but just qualitatively speaking, what brands are looking for is a one-stop shop solution for them, which is why back in 2018, till that point in time, we were largely predominantly a purely OEM player. We've built out ODM capabilities over the last 3, 4, 5 odd years. And we are seeing excellent traction, in our LED lighting space, in the fans category, as well as some of the appliances that we manufacture. Coincidentally, the fans as a category as a whole is entirely ODM. There is not a single rupee of OEM revenue within that category. And like I mentioned, because of the general trend where, our customers want, a one-stop shop solution, we expect ODM to be a major revenue driver. Also, just one other quick point, we are seeing excellent traction on the e-tail side. So, some of the online players, where they have their private labels, where they intend to procure, appliances under their own private label and sell. We are seeing some excellent traction there also. And we expect that too to be a major source of growth for us in the coming years.
Sanjeev, Akash, thank you very much for joining in. So they are betting on the ODM business. And for the benefit of our viewers, typically contract manufacturers will manufacture the products, but the design has been supplied by their client. But when it's ODM, that's original design manufacturing, companies, the contract manufacturers like Ellen Electronics will not only manufacture, but they will also design the product and the solution. And that enables them to get higher margins. It's been a subdued listing for Ellen Electronics, currently down close to about 6%. And a quick comparison with peers like Dixon as well as Amber. Ellen Electronics, though it has been in business for 53 years, it's much smaller in size. Its revenue base is about 1,100 crore rupees as of FY22, vis-a-vis, say, a Dixon, which is at 10,500 crores, or even an Amber, whose revenue size is more than 4,000 crore. Where Ellen Electronics scores over peers, it's on its higher margins. Valuations too are, if you look at the trailing numbers, FY22, valuations for Ellen Electronics were a little more reasonable compared to peers, trading at about 30 times, while names like Dixon are trading at 140 times, but this is trailing EPS. Get into a break. On the other side, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in next.